Hey, what's up, everyone? It's a strange old day. I don't know how to approach this. So, if you just stumbled across this video, the day trading video. This is Day Trade with Tony, the channel that talks about day trading the stock market, and I would caveat that trading the stock market is risky. Prices go down as well as up, and today we've had a down day. In fact, we've blown up the account.
Oh no! Oh my God!
That's probably why you've stumbled across this video. That's why you've decided to come in, and it just goes to show that day trading isn't easy. It's not a get rich quick scheme. So yes, you heard me right. We've blown up the account, and we did it live on air. We did it live whilst streaming on the live stream this morning. That's the downside. The good side is, or the good news is, it's not my main account. It was the small account challenge. So we started the small account challenge today. $514 in the account and 75 cents. And we took two trades. We took one trade, perfect start. We made 10% on the account. So $500 account, we made $51. That was our first trade. Now, I did not set myself a daily goal on this account. I've set myself a 15,000 overall goal. So I took another trade, and I made a rookie error. I didn't check the halt levels as it broke as it broke highs, broke the whole dollar. So key level, and then it moved up into a halt. And then it gapped down on resumption. Now I had 300 shares, so a big gap down with 300 shares meant that I was very close to blowing up the account. As it pulled back up, I thought, okay, we'll gap down, fine. It'll move on to new highs, and then it flushed hard, and I got liquidated. So I ended up losing $417 before I actually got liquidated on that one trade. So $417 on a $500 account, $514 account. So yeah, I've blown up the account. It's not easy trying to trade a small account, and this is the whole point. So trying to manage your risk is one thing. But you've got to balance the risk with the reward. And unfortunately, if you get stuck, this is why I always advise new traders not to trade into halts. Watch the halt levels, exit your position before you get stuck into it. And that's the kind of well, this is definitely a case of do as I say, not as I do. Because you're never sure one way or the other whether it's when it resumes, whether it's going to gap higher, gap lower, or open level, and you never know what the reaction the market's going to take on resumption either. So even if it opens level, it could just flush before you actually have a chance to react. So I always say, volatile stocks, trade with stop losses. I didn't do that, and don't trade into halt. Don't hold into a halt. And I did do that. So two key mistakes on episode 1 of the micro account challenge. So I suppose take 1 was a bit of a blooper. We'll have take 2 again tomorrow. So we'll start tomorrow. I've transferred from one account to the other. They facilitate that. So we'll start again tomorrow, but this time 500. I think we'll start with 510 or whatever it'll be. Look, I'll find out in the morning when the account when the account's back online again. So look, not a good start to the small account challenge. But I think the big thing is here, the key takeaway here is that if you do have a small account, protect your equity. Staying afloat is the priority. It's not about making big gains. Swinging for the fences with every bat is just going to blow up your account. Proof of the matter was me today, and but you still have to kind of look for gains where you're going to cover the cost of the transaction, so fees and charges, etc. So yeah, we do it again tomorrow. That's an hour before the market opens, so 8:30 market time. That's 1:30 p.m. my time. So it's the last hour of pre-market. I didn't take any trades pre-market today. There was no setups. So a couple of things that I'm looking for with this small account. The setups that I'm looking for stocks that have a nice momentum, upwards momentum. The trending upwards. They're above the leverage threshold, so that I can take a trade with some leverage, get a good move, and it will give me enough, not only just to cover the cost of the transaction, but enough to grow the account. So that's what I was looking for today. Got it with the first trade. I probably would have got it with the second trade, but I didn't check the halt levels, and that's my fault. So the halt level was my mistake. If going into the trade again without checking the halt levels, I probably would have entered at the same spot. The break of the whole dollar, new highs, etc., etc. Upwards momentum, high volume. It had all the marks, but for that halt level. The halt level, it cools the stock, cools the momentum, and if it then gaps down, you're not in control. So what I had gained on the first one, I was going to lose, and then some on the second one. So look, take two. We'll start again tomorrow. Come join me, and let's see if it can be done trading a 500. Can we flip and turn a $500 account into a $15,000 account over time? Of course. I mean, we're probably looking at what, 6 weeks, 8 weeks, maybe to be able to achieve that if we're trading on point. If we do that, great. If we don't, then it's proof that, look, it can't be done. Well, it can't be done by me, at least, anyway. Yeah. How did it work? Let's just have a quick look and go into it. So the first trade I took today was on Tianru. So this was one of a lot of Chinese stocks over the last couple of days have been moving up since last week. Been moving up. No real company-specific newsworthy catalysts, the individual stocks. So it's just basically the Chinese sector. Not even a industrial sector that you would say connects them. So some could be bioscience, some could be finance, manufacturing, whatever. So they don't seem to be connected directly, but they are moving up on abnormally high relative volume, and this was no different. So this moved up. It was already up quite a bit on the day. Had a good day the last 2 days, Friday and Monday, and it was gapping up quite heavily. I mean, this was up. I think it was what 90% or something at the time. Anyway, as it moved up, we had the pullback, got back above the V, had the pullback, and then the move. Now the high of this candle here. So there's argument to say that you want to be getting in at like 470 or the break of the $0.75, 475. The pullback, next candle makes a new high, would have been like 470, 475. There's then another argument that you get in at 481, so the new high of day, if you will. So I looked at the whole dollar, and I got in for the break of $5. Why am I not getting in earlier? Quite simple. I could have got in and probably would have got in at 475. On my main account, that's probably where I would have got in on this. But the broker that I'm using doesn't afford leverage on any stocks under $5. So the with a $500 account, the most I'm going to get up until $5. The most I'm going to get is like up to like 100 shares. So given the fees and commissions that I've got to bear in mind as well, I then probably would need like 25-30 cents just to make it worthwhile. It just didn't. It's like picking up pennies on the in front of a steam train. So I'm waiting for the break of $5. It doesn't happen until, well, we actually tap $5 on this candle, pulls back, and then it retests and breaks $5. So I got in, I think I filled at 508. As we start to make the move up, we get a little bit of consolidation at 530, so I exited the entire position. I've managed to get a good 20 cents move on the ask. And I think my fill was 25. So by the time I got filled, it's about 525. So managed to get a little over $50 on that particular move. It did move up a little bit further into a halt, and then on resumption, it flushed down. So I was happy with that trade. That was a good trade. It was 10%. That was a good trade. That was a trade that, under normal circumstances, is walk away. You're over goal. 10% growth on your account on a single trade, let alone a single day. 10% growth on your account is a great trade. So that should have been my cue to walk away. But I got greedy. I thought there's a lot of momentum in this market. There's a lot of movement in the market. So, and I was already watching Leisure Holdings. Leisure Holdings was moving up pre-market quite substantially. It was already over $5, so there was already leverage available. And then this started to make a move back up. I thought, over the VWAP, this is interesting. So this gapped up, then it resumed over the VWAP, pulled back briefly underneath it before moving back up into a halt. On resumption, it gapped up higher and it moved higher. So this would have been a good place to have got in here. So in theory, the break of $7 as this moved up above the VWAP into the halt, it gapped up higher, moved higher, could have taken off. It rejected at $8, taken some profit there. You got a whole dollar move, and maybe 300 shares at that stage. A whole dollar move. That's $300 in a single trade. Would have been great. It did pull all the way back down for then bouncing on the VWAP or the $7 area, moving back up. So I got in here for the break of $8. I was watching this move back up. I probably could have got in at 750. 750 would have been a good entry. And I got in for the break of 8, not watching the halt levels, which is rookie mistake. My fault, and I normally would be watching the halt levels like a hawk. And like I say, I've never done never tried to trade an account of this kind of tiny, this small before. But look, so we got the move up into a halt, and I'm up in at 803 or whatever it was. So I've got an entry there just as we broke $8 into the halt, and then on resumption it gaps down. So my first instinct, I'm not going to stop in play, so that's another mistake that I've made on this. And when you're trading a small account like this, if you're trading aggressively, you can't afford a mistake. You have to be pretty much spot on, and that's 2 mistakes straight away. So I thought, okay, normally I would have been stopped out. Normally I would have cut this and run, and I didn't. It moved up, back up to $8. I thought, okay, we're going to be golden here. We're back over $8. We're going to be golden. We'll move on to new highs, and I'll get my 15, 20 cents or whatever it is that I need to get. Another profitable trade. We'll finish over $100 on the day, and the first day, 20% growth. Great, fantastic day. Instead, it reached the top and flushed down hard. And I got liquidated on the flush down. It broke $7 and away it went. So that was the end of that challenge. That was essentially the small account challenge take 1 gone. And I could be sat here telling you that, oh well, you know, it is what it is, and it is what it is. But I suppose rather than showing you that it can be done, that shows you how difficult it actually is to trade with a small account. So trading is risky. This proves it. And particularly risky with a small account. It's easy to make money with money. If you've got a bit of large account, you can make reasonable money with it. Relatively easy. And if you've got a small account, you have to be a little bit more selective with your trades. You have to be a little bit more discerning and more disciplined. And just the change in mentality is probably taken me yesterday. So just to put this in context, this is like my rocket was. This is the SpaceX launch all over again. My rocket was going to the moon. I've had not two of, but my two largest trading days within a couple of days of each other. Two six-figure days within a couple of days of each other. And now I've just blown up my account on a small account. But the mentality shift is different. So I'm trading with a larger account, high momentum stocks, taking calculated risks because you've got a cushion to be able to take those risks. Is a different mentality to actually having a small account where you can't afford to take the risks. You'll have to be a lot more disciplined in your stock selection, your trade management, and your discipline, and not be greedy. Rule 101, don't get greedy. I am always saying, I've got a bit of a catchphrase, which is get green, get to gold, get out. Get green, stay green, get to gold, get out. I got green. I just didn't stay green, and I certainly didn't get to goal. Well, I don't know what my goal was, so I'm going to set my goal. I'm going to set my goal at 10%. It's an extremely aggressive goal. I know 5% is an acceptable goal on a small account. So I'm going to set my goal at 10%. So I showed that I can do that today. My first trade was 10%. So from now on, with this account, I'm going to grow it to at least 10%. And I'm going to set my goal. Once I've got to goal, I'll get out. I'll switch off. Maybe even switch on the main account and trade. If we've got particularly volatile stock. Today I didn't trade after this at all. I don't have no need to because it's the second day of the month, and on my main account I'm over goal. Over goal on the month. So I've got a little bit of leeway to play with. And again, that means that it's different for me than it is for most people. So if you're trading a $500 account, it's usually because you've got $500 to trade. So you need to be very, very risk conscious and risk averse with that. Protect that equity at all times. It's absolute must. So look, I'll see if I can change my mindset for that aggressive mindset. I need a more conservative mindset, certainly for the first couple of days. If I can get 10% for the rest of the week, so Wednesday, Thursday, Friday. So I'll have 10% on Wednesday. I'll grow it, that'll be 550. I'll have 600 on Thursday, 660. So we're looking at 650, 700 by the end of the week. If we can do that, then it puts us in a really good position to go into next week. So that's kind of the goal. If I can do 10% daily for the rest of the week, we should be in a good position. But again, it's about not swinging for the fences, but being cautious with your entries, looking for stocks that have the possibility to get you that home run, and I say home run, it's getting you that 10% with each entry. So my trade selection up until this point, yesterday was on point, 100% success rate on my trade selection yesterday. But I was able to take bigger risks. At one stage, I think I was risking about $15,000 or whatever it was. My unrealized losses were about $15,000. But I had over $30,000 cushion to be able to do that. So I was risking 50% of what I'd already gained, and I ended up making at that stage another 80,000 or something, or 90,000 or whatever it finished at. So the risk reward was okay yesterday. Today, not so much. And when you don't have that cushion available, you need to be more cautious. And today I didn't have that luxury, and I traded as if I did. So don't trade halts. Lessons to take away from today. Get green, stay green, get to goal and get out. So make sure you have a goal. Lesson 2 is don't trade into the halts. You don't know which way they're going. And you can't manage your risk when the stock's halted because you're locked in the trade. So you don't know if it's going to halt down or gap up or what the scenario may be. And lesson 3 is trade cautiously. So tomorrow we do it again. Let's see you now before market opens. And small account challenge take 2. We'll try not to blow it up. In the meantime, enjoy your evening.